Hi everyone, I am Dr.V.VIJI, Associate Professor of Economics, A.D.M.COLLEGE for Women, Nagapattinam. Today we are going to see circular flow of income. Here we have to see the introduction to the circular flow of income. The circular flow of income is an economic model that depicts the continuous exchange of money, goods and services between households and business in an economy. This dynamic interaction is fundamental to understanding how income, production and consumption are generated and circulated. Definition of circular flow of income. The circular flow of income refers to the continuous cycle of money, goods and services exchanged between the main sectors of an economy. First one is household sector, next one is business sector, and third one is government sector, and fourth one is the foreign sector. The cyclical flow is driven by the exchange of factors of production such as labor and capital in return for payments such as wages and profits. In the circular flow of an economy in a two-sector model without the financial market, it is assumed that no savings are made in the economy. It means that the households spend their entire income on the purchase of goods and services, and every firm spends all the receipts from the sale of goods and services to make factor payments. However, it does not happen in the actual world, that is, households do not spend their entire income on the consumption of goods and services. Instead of, they save a part of their income for the future. In the same way, the firms save more part of their receipts for the expansion of business or various other reasons. Besides, the firms also borrow money from outside to finance their expansion plans. All of this savings and borrowings happening in the economy are channelized through the financial market. Therefore, in a two-sector economy, the savings made by households accumulated in the financial market are used by the firms for investment purpose. Financial market refers to those institutions like insurance companies, banks, etc., which translate loanable funds in the economy. Here we have to see household sector and the firm or business sector. Through these two, it is related to land, labor, capital and other organizational aspects. These four are interrelated. Household sector entirely depends on business sector for any consumption goods and commercial goods, whatever their needs. And business sector also depends on the household sector. Here the business sector depends on the household sector for land purpose, labor purpose and capital purpose. Circular flow in a three-sector economy. The government also plays a crucial role in the economic development of a country. Therefore, the circular flow of income in a three-sector economy includes households, firms and the government sector. The government of a country acts as both a firm and a consumer. As a firm or producer, the government produces goods and services for the economy. However, as a consumer, it spends money on the consumption of goods and services produced by the firm. Besides the flow of consumer income in the two-sector economy with a financial market, the additional flows due to the inclusion of the government. Between households and government, the money from the government to households flow in an economy in two forms. First, in the form of transfer payments such as old age pension, scholarship, wage, salary, etc. Second, in the form of factor payments for hiring factor services of the households. This money flows back from households to the government in the form of direct taxes such as indirect taxes, income tax, etc. Between firms and government, the money from firms to the government flows in an economy in the form of direct and the indirect taxes. However, The money from the government to the firm flows into an economy in the form of subsidies. In this case, the government grants subsidies to the firms and makes payments to the firms for the purchase of goods and services produced by them. The financial market also plays an important role in a three-sector economy, as the government saves a part of their earned income and deposits the same in the financial market. Besides, the government also borrow money from the financial market so it can meet its expenditures. Here we have to connect the government sector to household and the business sector. Here the money will be circulated from household to business and government to household and household to business sector. Role of government sector in an economy. The government sector of an economy performs the following activities. It collects tax from the household and the firms. It makes a payment for the purchase of goods and services from the firms. It also makes transfer payments to the households and provides the firms with subsidies. Lastly, the government saves and borrows money by taking help from the financial market. Circular flow in a four-sector economy. Besides household, firms and the government, the foreign sector also plays a crucial role in an economy. Therefore, the circular flow in a four-sector economy consists of households, firms, government and the foreign sector. Money flows in each of these sectors are as follows. Household sector. The household sector of an economy provides factor services to the firms, government and the foreign sector, for which it received factor payments in return. Besides factor payments, the households also receive transfer payments like old age pension, scholarship, etc. From the government and foreign sector, the household sector spends its earned income on payments for goods and services purchased from firms, payments for imports and tax payments to the government. Firms or business sector. The firm received revenue for the sale of goods and services from the government, households and foreign sectors. They also receive subsidies from the government to produce goods and services. Besides, the firms make payments for taxes to the government, factor services to the households and imports to the foreign sector. Government sector. The government receives revenue for the sale of goods and services, fees, taxes, etc. From the firm, households and the foreign sector, it also makes factor payments to households and spends its revenue on transfer payments and subsidies. Foreign sector. The foreign sector receives revenue for the export of goods and services from firms, households and the government. It also makes payments to firms and the government for the import of goods and services and the households for the factor services. The financial market also plays an important role in a four-sector economy as the savings made by the households, firms and the government gets accumulated here, and this money is invested by the financial market in the form of loans to firms, households and the government. The inflows of money in the financial market in a four-sector economy are equal to the outflows of money, which makes the circular flow of income continuous and complete. How the circular flow mode works. The basic purpose of the circular flow model is to understand how many moves within an economy. It breaks the economy down into two primary sectors, households and corporations. It separates the markets that these participants operates in as markets for goods and services and markets for the factors of production. Other sectors can be added for more robust cash flow tracking. The circular flow model is used to measure a nation's income because it measures both the cash coming into the existing nation's economy It's also used to gauge the interconveniency between sectors because a robust economy will have interaction between components, the relationship between a government's taxation policies and a household's consumption spending will have a direct impact on a business ability to sell goods. The circular flow model is aptly named because funds tend to flow continuously between sectors. This diagram shows how many often flows from one sector to another, awarding benefits along the way. No single sector should hoard or collect all resources. A fully functioning circular model will continuously move funds so each sector can operate approximately. This example is a single type of model. It doesn't represent all circular flow models. Implications of the circular flow model. As a fundamental concept of macroeconomics, the circular flow model has been widely applied in different studies with significant impacts on the understanding of economics. 4 examples are listed below to show the significance of the model. Measurement of national income. The sectors in the circular flow model are the components of the calculation of national income. The expenditure approach calculates a nation's GDP as the sum of the household consumption expenditure, private domestic investment, government consumption and investment expenditure, and the net exports, that is GDP is equal to C plus I plus G plus X minus M. Here X minus M represents export minus imports. Knowledge of interdependence. The circular flow model underpins the knowledge of interdependence between sectors in an economic system. The activities and money flows cannot take place without interaction with another sector. Ending nature of economic activities. Money and economic resources flow in cycles identically with an equilibrium of aggregate income and expenditure. Injection and leakages. The circular flow of an economy is balanced when the total injection equals the leakages. If injections overweight leakages, the country's national income will grow. If injections are below leakages, the national income will decrease. Types of circular flow of income. The real flow. The real flow in an economy refers to the movement of factor services from households to business and the corresponding movement of goods from business to consumer. Physical flow is another name for real flow. There is no money involved in this kind of circular movement, and only the goods and services are transferred between the two economic sectors. An economy can use this flow to estimate the size of its growth process. For instance, if enterprises receive more factor services, they will generate more volume, which will subsequently hasten the process of economic growth. Money flow. Money flow refers to the exchange of factors, payments between business and households. In this type, there is an exchange for their factor services and the exchange of consumer spending between business and households for the purchase of goods and services produced by business. Nominal flow is another name for money flow. Money is exchanged between the two sectors, that is households and business, in this kind of circular flow. Outcome of a circular flow model. A circular flow model need not contain an outcome or end. Instead, it describes where an economy is right now in terms of how its inflows and outflows are being used. Changes to the economy can be made using this information. For instance, a nation may decide to cut back on imports and some government initiatives if it realizes its national income is insufficient. Methods of calculating national income. The three methods of calculating national income are value added method, the expenditure method, and the income method. Now we see the details of income method. The income method is used to calculate national income at the description level. National income is calculated using this method by summing the income obtained by all factors of production for their factor services over the course of a year. Expenditure method. The expenditure method can also be used to calculate national income during the disposition phase. It calculates national income by calculating final expenditure on GDP at market price. Final expenditure refers to money spent on finished items. Now we have to see the value added method. This method is used to estimate national income at the production level. Now income is the value of final products and services generated in a country's domestic territory plus net factor income from the rest of the world at the production level. The goods and services produced by cash producing unit or the gross output value at market prices. Limitations of circular flow of income. Simplification. The circular flow is a simplified representation of a complex economy, omitting certain unknowns and the external factors. Closed economy assumption. The circular flow assumes a closed economy without external trade, which doesn't reflect the reality of global economic interconnections. Neglects government interventions. It overlooks the role of the government in regulating the economy, implementing policies, and addressing market failure. Limited to real transactions. The circular flow typically focuses on real transactions, omitting financial activities and flows. Static representation. The present a static snapshot of the economy at a particular moment without capturing dynamic changes over time. Income distribution simplification. While it shows income flow between sectors, it doesn't delve deeply into the intricacies of income distribution and inequality. Conclusion. National income is the crucial concept used for analyzing the growth rate of any country. Every country calculates its national income after a specific period, maybe quarterly or yearly. It demonstrates the citizen standard of living of any country. Although it includes all the essential domains like education, medical sector, banking sector, foreign trade, tourism, etc. All these sectors are crucial for demonstrating a clear picture of the country's economy. Thank you.